Hi everyone, welcome. So, hi, I'm Dean. Okay, welcome to the fifth episode of our Going Places with the Curtin Degree. Okay, so yes, this is the fifth episode. We've been doing this for the past 5 months, and to those who have been following us, welcome back. Okay, to those who have just recently joined us. Okay, good to see you. Welcome, and I do hope that you can learn a lot of information from our experts. Okay, so today we have quite interesting topic that we are going to cover. All right. So today's topic will be the financial savviness during the COVID times. Okay. So this is what we do. All right. Curtin University itself, we have about 230,000 graduates around the world, and many of them holds those top positions and the key crucial decision making inside the corporate world. Okay, so it is our objective to bring in all these experts to you. Okay, to actually tell them what's going on in their daily life. Okay, so what happens after you come out as a Curtin graduates, what happens next, where you work, and these are the people who have already experienced all over the place, and this is what we're going to bring it up to you. Okay, so what's going to happen today? Okay, um before that, I'm Dean. Okay, so I'm the vice president of the Curtin University Alumni Malaysia chapter. I'm a graduate in the Bachelor of Commerce, Accounting and Finance back in 2006. Okay, so I was in Curtin Bentley campus. We have quite a number of campuses around the world, and I spent quite a good time down there. A very wonderful life. Stayed on campus. I've met quite a number of people, made friends from all over the world. To be honest, that is one good experience that I've ever had in my life. Okay, so you see, what we can see that this COVID has changed a lot in our life. Okay, so those that we have seen, it's only to be seen inside the movies, and now it's being implemented and it become like our normal daily life, such as like this webinar. Okay, so last time we only see this as a concept whereby people from thousands of miles away to communicate with each other to make decisions during for a meeting, rather than flying over to the other side of the world. They can make split decisions, like real time. Okay, so this is what happened in the financial world as well. Of course, because of this pandemic, people are wondering what's going to happen in our financial markets, what's going to happen with our economy. Okay, what's going to happen next year? It's only like few days away. Okay, we got about a couple of weeks. So what's going to happen next in 2012, 2021? Very sorry about that. So what we are doing today is that we have three panelists, three experts in from the finance world. So they are going to share with you all their knowledge and what are the things that may impact in our daily life and our decision making in the future. Okay, but whatever it is, do stay tuned, right? Because to those who are watching right now, okay, don't forget to share this live video and comment. Okay, do comment there, hashtag Curtin Malaysia, to stand a chance on winning 3 exclusive Curtin pen drives. Okay, these are specially made for this session. All right, so I don't have it right now, so I think it is a very interesting topic today. So do stay tuned and just go with the flow, I would say. Okay, so let me introduce what will be who are the moderators and the panelists. Okay, so our moderator will be Dr. Abby. Okay, Dr. Abby is a senior lecturer in economics in the Department of Finance and Banking in Curtin Malaysia Faculty of Business. He has had 12 years of teaching experience in Curtin, Malaysia. That is 12 years in Curtin, Malaysia alone. So he is one of the most senior lecturer in the Curtin itself, in Curtin, Malaysia. His dedication and passion for teaching have earned him many accolades, including Fellow of the Higher Education Academy of UK. Okay, getting a fellowship is not that easy. Okay, good job. And national, international teaching awards. Next will be our panelist, Max Eng. Okay, Max has been in the wealth management industry for the last 18 years and truly believes that everyone should have a financial plan in place as it provides a big picture view of one finances and one better clarity and confidence in making informed decisions to achieve one's financial goals. Okay, so if you need some advice about how to make a sound financial investments, I think you can ask for more information with Max N. Okay. Next panelist will be Andrew Tan. Andrew is a veteran in the Big Four audit firms, specializing in risk advisory. Many do not know that finance is all about risk as well. How do we manage the risk? Okay, so I think you can learn a lot more about the risk management from Andrew Tan. Okay, in recent years, Andrew has become intimately involved in fintech with the financial inclusion agenda in the Indo-China region. Okay, so he's not only in Malaysia, he's been all over the world. All right. Next will be our panelist Bong Jin Hao. Okay, this guy is very interesting. Jin Hao is a position trader and investor in the capital market. He's also the founder and chief master trainer in street finance. He is a frequent speaker for Bursa Malaysia investment banks as well as universities. Okay, so this is the guy who you should listen to whenever you want to think about, okay, I would like to go into trading. Okay, so Jin Hao is the person. All right, so let's take a look at some of their achievements. Hi. Welcome everyone. Welcome everyone. Okay. Let me introduce to you guys. Okay, we have Dr. Abe. Dr. Abe, say hi to everyone, please.
Hi, good afternoon to all of you.
Good afternoon. Good afternoon.
Hi,
Okay.
hello.
Yes, we have Max. Max, say hi.
Hello, hi. Thanks
Hi.
for having me.
And welcome, Mr. Andrew.
Hi, how are you?
I'm good. I'm good. Welcome, Jin Hao. Hi. How are
Hi
you?
everyone. Good. Hi everyone. Jin Hao
Oh,
here.
good on there.
Yeah.
Okay, all right. So everyone, Dr. Abby, how's things going on right now? You are in campus. Are you in campus right now? It seems like you're
Yeah,
in campus.
yeah, I'm in campus right now.
Mm-hmm.
Good afternoon to Dean and good afternoon to all the viewers and welcome to all to this live session. And this is today's live webinar session is financial savviness during the COVID time. This is the fifth live session under going place with a Curtin degree. I would like to thank Curtin University of Malaysia to give us an opportunity to discuss about the financial savviness during the
Mm-hmm.
COVID time.
Yeah.
And now uh, we know that COVID situation. Nobody expected that we are going to have this kind of situations, and
Yeah.
all of us are under tremendous pressure as well
Yeah.
as even though COVID COVID affected all of us, even though we tried our level best to solve the problem as much we can. And then
Mm-hmm.
Curtin University is actually moved to the online class last 2 semesters, and then we did manage very well without disturbing the students' time and learning outcomes. So next year we are planning to move to hybrid session, whereas we are planning to merge online as well as face-to class together. So
Wow.
I can say that we try our level best and we are doing very well
Yes.
during the COVID time. And what about you, Dean?
Well, I think like you said that the university is already changing and then adopting all these new technologies around. Okay, I think as you said, I totally agree that a lot of people were caught off guard that this pandemic happens and a lot of industries are not ready for that. So I think as part of the risk management, all the corporations nowadays will need to adopt this kind of strategy, like disaster recovery plan if let's say there's a pandemic happening and so on and so forth. Like I said, nobody expected this, so I think um, it's best, all right, to listen to from all our experts, our panelists, then perhaps they can give us some insights about how do we tackle this into the in the financial industry itself. Like but I'm always curious, doctor. What do you think? What is the meaning of this financial savviness? Okay, what are we trying to tell to our viewers? What exactly is financial savviness?
Yeah, the first question we should ask ourselves: Are we or are you financial savvy? Because during this kind of situation, pandemic situation is very very important because this kind of situation can happen in future as well. So we need to
Yeah.
be financial savvy. So what do you mean by
Mhm.
financial savviness? Financial savviness person is always dealing with their expenditure, credit, and other money matters. So they
Ah,
should maintain healthy financial standing. So through proper planning and budget. Otherwise, there can be a problem in future because you see there is a chance that our means can be entered. So therefore, we have to plan our budget and our proper money matters is very important.
mhm,
Therefore, financial savvy means that we use our decision making skills and practical knowledge and ability to make good judgment. So therefore, a financial savvy person must have a plan and don't wait till recession or some kind of financial
mhm. So
financial.
basically, what doctor says is that okay, we need to equip ourselves and to be ready at any time. So
Absolutely.
anyhow, I would like to I do not want to waste too much time. Okay, so Dr. Abby, I'll see you guys soon. Panelists, Jin Hao, Andrew, and Max Ng. I'll see you guys later on. Okay, I'll leave it up to Dr. Abby. Okay, see ya.
Yeah, thank you. Yeah, good afternoon again to all of you. Welcome to our webinar, today's webinar. Again, my name is Abby Philip. I'm Senior Lecturer in Curtin University, Malaysia. And today's our topic is financial savviness during the COVID time. So now we have a wonderful panelist today. We have such as Max, and he is a founder and managing director of FinWealth Management. And he is very keen about holistic financial planning. See, financial planning advice is one of the most important things during the COVID time. And then wealth management solution. And then we have Andrew. Andrew is veteran of Big Four audit firms and specializing risk advisory. See, again, he is one of the best panelists. We can get a lot of advice from him. And then the another important thing, Andrew is really involved in financial inclusion agenda in Indo-China region, that his experience really will help us a lot. And then we have Jin Ho, and he is a founder and chief master trainer of the Street Finance. And he is a frequent speaker for Bursa Malaysia, and then different university and investment banks. So we have wonderful panelists today. We have to advise us how to manage our decisions and how we will face this kind of situation. And I'm so glad to say that all of this, our panelists is our Curtin alumni, and so they enrich us with their wide experience in industry, and their experience will definitely help us to make our healthy financial standing through proper planning and advice. Welcome to this live webinar session, Jin Ho, Matt, and Andrew.
Thank you.
Okay.
Thank you.
Okay. Now, without further ado, I really want to go for some kind of insight we would like to get from you. Now, can you please tell us a little about what do you do in your current job, Jin Ho?
Okay, so I'm personally a trader and also an investor in the capital market. So in layman term, I'm the guy who always click here and there, look at the plus and minus and all the numbers in the stock market. Okay, so on top of that, I'm also the founder and also the chief master trainer of Street Finance, which is an education company focuses on coaching individuals who want to become successful traders. So that will be a short intro of what I do. All right. So.
Okay, wonderful. And meantime, I would like to inform all the viewers, share this video and comment #CurtinMalaysia, and please try to comment and stand chance of winning exclusive prize from Curtin Malaysia. Now, Max, what about you? Can you please tell us about further?
Hi. Yeah. Currently, I'm part of the management team looking after the day-to-day operations of the company. We have a team of licensed financial planners who provide independent financial advice in the areas of investments, insurance, and estate planning. So we believe having a holistic plan helps people make better financial decisions. So my job is to make sure my team continues to deliver on that promise to help clients grow and manage their wealth using best practices in financial planning. Maybe I can share a bit more in more detail what I do. For those of you who are wondering what is financial planning, right? So, well, financial planning is about planning for your life goals. So, be it short-term or medium-term goal, or on how much you need to save for your down payment for your first house or your car, and whether or not you can afford the repayments, right? Or those longer term goals such as retirement or child's education funding. So then in order to know what strategies or what to do to implement and achieve those goals, you need to first know and understand what resources you have based on your current financial situation. By having a big picture view of your financial situation, only then you will know what is the best way to optimize your money. So this is what we call holistic financial planning, where you look into angles of, every angle of one's net worth, and so that you can help them look into the savings, the investing, the risk management, and how to reduce costs and reduce the financial mistakes.
Oh, great, Max. I would like to request all the viewers, please do comment in your comment box, and then we will address your comments, and our expert panelists will address your comments, and that will be very helpful for your planning as well. Now, Andrew, can you please elaborate?
Sure. So I'm an executive director with BDO. BDO is a international audit, tax and advisory firm. I'm also an investor in a AI startup called LPTech. In terms of financial savviness, this is where it gets very interesting. A lot of the work that we do when it comes to financial inclusion, a lot of the people, especially in cash-based economies, find it very hard to get loans from banks, whether it's micro SMEs, individuals, and such. So this is where we come in, and we develop very contemporary algorithms to credit score people using alternative data. And what we mean by alternative data is everything from looking at the smartphone metadata, geolocation, and it's really looking at uncovering certain lifestyles, habits, as well as your digital footprints that would indicate that you're a credit-worthy person. And with that, hopefully we'll be able to help a lot of the farmers, the rural merchants, students to be able to access formal funding, right? And on the other side of it, looking at it from Malaysia's perspective, with all the issues that we are going through right now, it also helps to decide who are the good customers that the banks should have versus the other guys, right? And when we say other guys, it's not just outright rejecting them, but it's more so to do with pricing the risk correctly. So it's trying to encompass a bigger pool while helping the banks maintain a profitable yet equitable way of doing it. So yeah, that's what we do.
Okay, thank you, Andrew. And I would like to ask all of you, what are your fondest memories of your time in Curtin? Jennifer?
Okay, so personally, I miss the days whereby I was the president of Finance Club, working closely with the finance faculty. Okay, and I do enjoy collaborating and inviting external speakers from people who are in the industry to speak, okay, to the current students, the undergraduates. And I should say that because I was the president running the club, and I enjoy seeing students get benefited from those events. Okay, that's why basically I founded the company right after I graduated, which is the company that I'm managing right now. Okay, to sort of fulfill my passion of sharing people, okay, the financial knowledge that they need. Okay, so yeah, I really enjoy that. Apart from the academy things that academics part, okay, in my uni life, another part that I really enjoy is actually attending those club events, okay, and organizing those club events for students. So my uni life, I would say that my uni life is basically attending classes and then do events or attend events in a campus. So though there are really a lot of like memories, okay, in every events that we have organized and also attend. Yeah. So if you were to ask me, that would be my fondest memories that I do still miss. Yeah.
Okay, Max, what about you, Max?
Honestly, for me, this was a very long time ago. I think same with Andrew. I can't remember much, in detail, but I just remember, the feeling and the experience when I first, arrived in Perth, and was a bit quite blur on what to do in a new place, new environment. But fortunately, I managed to rent a place, the hostel under the university. I think it was called Erica Underwood. Not sure whether it's still around. But yeah, it had all the facilities there, right? So it wasn't that bad. Just that it was being away from the family really, taught me how to be independent. Same with Jin, how we like the meeting people, like and Dean as well, meeting people from everywhere, all places, and the feeling of living in a university campus environment. That is something that I will not forget.
Okay, great. Andrew, what about you? What is your proudest memories of your time in Curtin?
Well, it's a long time ago, as what Matt. I think it was that feeling of independence as well as freedom. Where you live by your own rules, right? And whether you go to class, whether you do things, whether you even eat on time and all that, is totally up to you. And it was a lot of growing up and really developing who you are as a person. I felt, I discovered my love for cooking just because it's expensive eating out. So you learn to survive very quickly. I think you also learn, when I was studying, that was when ringgit was pretty bad. So you learn very quickly how to make do with the little that you have. And where you want more money, then you work for it. And I think that's sort of a experience to really then created that understanding that if you want something, you go out and do it and make it happen, and you don't just call mommy and ask for more money.
Okay. Okay, that's nice. You see, Curtin University experience really help you in your life as well as in your industry as well. We believe that Curtin University is helping a lot, not only subject matter as well as different extracurricular activities such as Jean Ho mentioned about financial club, accounting club, marketing club, and we have a lot of activities which actually enrich the students to reach to the industry needs. So that is really wonderful experience. The students, they always remember, they always have nostalgic feeling about Curtin University. And now a little more further, just going a little more deeper. Andrew, what are your thoughts on working overseas, and how has your experience been?
Okay. Well, actually, going back to the previous question as well, I think one of the very interesting experience I had was that I was the first class to do strategic economic analysis as a major, and I was the first batch that went through this with Professors Harry Block and Thorsten Strombach, and it was very interesting because it's economics and game theory, and it's something very different at that time, but still familiar, and obviously the movie Beautiful Mind and all that came out around the same time, so it sort of made things a bit more real. Coming to working overseas, I've always enjoyed a lifestyle where I wanted to travel, but also to live in a place long enough to understand the culture and the lifestyle and such. So I've lived for extended periods of time in Thailand, in Australia, Laos. But even though I was there, I still covered the region and I traveled quite a bit. I think the most enriching components of that traveling and working overseas is that after some time, you no longer think of different working environments or cultures and all that as different. It's just that you're dealing with people, and people will be people, whether they're Singaporeans, Malaysians, Australians, whoever. And if you be kind to people and you treat people with respect, and you know your stuff when you're dealing with your counterparts, then things will be fine. And I think as Malaysians, we've been quite successful going overseas and performing well and thriving. And I think, should anyone be shy thinking about working overseas and thinking that I'm from Malaysia and all that sort of stuff, that idea is totally irrelevant. I think we are as good or even better than a lot of other people. But again, that's very much internal. It's on a per person basis. So yeah.
Oh, great. Yeah, wonderful. Now, national equilibrium, as we mentioned about, the game theory, this is one of the important thing. Negotiation is one of the important things now. It is very important during the pandemic situation. So, absolutely, we can't think about self-interest. Now we have to think about negotiation and working together. That is actually going to benefit all of the society as well as people. So now, a little more further, Jin Ho, I would like to ask you about what is your inspire you to pursue your career in the financial line, and what are your achievements?
So, what inspires me to really involve in the financial industry or the financial line is because I always think that the financial industry is an interesting industry, as in it is an industry, it is a line, okay, that creates the most billionaires and multimillionaires in the world. You think like people like Jeff Bezos, okay, he operates Amazon, and Elon Musk, he runs Tesla. It is a business, but when you bring business to the higher level, you will automatically involve the financial market, the capital market. Those things will be come into play. So I always think that this is an interesting financial line is always a very interesting place, okay? And it is always my goal, okay, to be able to grow, okay, my net worth, okay, and also accumulate my wealth, okay, via the capital or the financial market, okay. So personally, I do a lot of trades, okay, and invest in the share market and also the futures market occasionally. So I actually started, okay, involving in the financial market or in the investing industry when I was actually in year one, okay, of my degree study in Curtin. So a lot of people ask me about my uni life. Actually, my uni life is all about like filling my time with other things outside academy. Okay, some people might say it's a boring life, but I do enjoy learning a lot of things. Okay, and I do enjoy get started really early in the financial market. Okay, so because I started early, I think this one it gave me some advantage over there. Okay, because I started very early. That I think during that time I was just like year one study, 19 years old. Okay, so because I started early, I have achieved some results from trading, okay, and coaching and teaching being my passion. So that's how I started coaching and training people. And like after 2 years of being in the training industry, okay, that's how I get started to get speaking gigs and speaking engagement from investment banks, okay, like Kenanga Investment Bank, okay. I work with them very closely, and also Bursa Malaysia. So it is actually, I'm really quite happy that I have the opportunity to speak for Bursa, put it this way. Okay, so apart from that, I also run my own program coaching individuals who want to learn how the professional actually trade in the market. Of course, we have our own unique ways. Okay, so but yeah, these are the achievement, okay, that I have achieved so far in trading and training. But I have to mention one thing, okay, a little bit of disclaimer. This is not a mainstream path, okay, or a mainstream career. But being in the financial line, okay, or being a finance graduate, it does really help me, okay, to understand certain concepts faster than others. Yeah, so yeah, that will be all I for this.
Okay.
Yeah.
Okay, that's good. Did I still remember your involvement in finance club? The early stage of finance club, you people started to organize lot of activities, and that is really helpful. Now we have wonderful trading room. We have trading room. We already started to use the trading room. I request all the viewers, those who are really interested in trading room, I request all of them to come and visit and see how much knowledge you can get from this kind of trading room. And now I would like to go a little more serious question to Max. Now, we know that we live in pandemic situation. So now, how should one control their finance during this kind of crisis? What is your advice on it?
I think I need to also follow Jin Hao. I need to put disclaimer. uh, well, but again, I'm going to give general advice lah, because whatever I'm sharing here is more on the general rule of thumb, but more importantly, you still need to look into your financial situation, right? But if you're talking about controlling one's finances, it's the basic, right? It's a basic thing that you don't spend more than what you earn, right? That is the general rule. And you can get all this information online, right? In personal finance, live below your means, right? Cut back on the expenses, especially those unnecessary stuff. Right? So this is a time where you need to scan through your monthly expenses, right? See where this costs all going to. Look through those, especially those recurring expenses like your those subscription, gym membership, your Netflix, Spotify or Astro, right? See whether you really need them or not, and if not, you might want to consider canceling them. And if you still need them but you're not using it as much, then you can look into maybe subscribing to a lower plan, right? So controlling your spending, don't control your spending. Don't buy things you don't need. I know nowadays we get trigger happy in the sense that when you click on your Lazada or your those Shopee, and you get a bit carried away, right? Because you may have a credit card and you can just easily just click buy, right? So that is something that you probably need to take note of, right? And if you can set a credit limit so that you don't overspend, and these are just a few steps you can to take to control your finances.
Okay, great. I would like to request all the audience, please do leave your comments, and the panelists will address all your comments. And if you have any financial worries, really they will help us to solve your worries. And then whatever may be your questions related to finance or general, please do make sure that you leave your comments in the chat box. Please don't forget that. So now, Andrew, I would like to ask you, how do you see financial services changes with the rise of new technology? Nowadays, technology is very, very important, especially during the COVID situation, pandemic situation. We are, university suddenly moves to the online classes, and we are equipped. We thought that we can't do that. Actually, we really manage very well. So our assumption is really wrong. I would like to say that. So we utilize the LMS, the learning platform. So we thought that we couldn't do that, but The technologies actually was there, but we didn't utilize. But during that pandemic situation, we really utilize it. So now I would like to ask you, how do you see financial services changing with the rise of new technology in the context of financial management? Andrew?
Okay. Maybe the first thing is that we need to not be afraid of technology, right? And yes, there are cybersecurity issues, privacy issues, and a whole vast variety of things that might make us afraid. But if we don't try to assimilate technology into our everyday life, then I think we are missing out on a lot of opportunities, right? Case in point, WhatsApp. WhatsApp started as a casual messaging app, but everyone's using that for business today. Whether it's to sell biscuits for Christmas or whatever. Now, in terms of financial services, what I see, especially from the AI ML type of work that we do, is that data is going to be very, very key, right? Because the banks and fintechs of tomorrow will want to give you an experience that is fit for you and not be so much product driven, right? And what I mean by that is that the data that we generate, whether it's through Facebook, through our check-ins, or the type of things that we buy, when we buy it, what time we buy it, the type of network that we have, all these things will inform financial service providers how to create an ultra customized product for us. And what I mean by that is that if you're a young person, 23 years old, and you're just looking at your first job, and you have the world in front of you, what are the key things that are a priority to you at this point in time? So looking at what's available in the market today, it will seem like within the next 5 years, you're going to have all these players that's going to look at a person's profile and go, I'm going to sell you insurance because that's important as you grow older. I'm going to sell you a investment plan. I'm also going to give you a loan for a car, a house, and all that sort of stuff. And on top of all of that, I'm also wanting to capture you as my customer for life. And to do that, they really need to understand how you live your life and almost predict what you're likely to do, right? So again, this comes back to data, and I think that's really going to change financial services. So be careful with what you do online, what apps you use, where you sign in, because everyone is watching.
Oh, yeah, true. Absolutely. I totally agree with Andrew. Now, I would like to go little further detail. Matt, what are the opportunities or option available to us to save our money or to make long-term investment during this kind of situation?
Yeah, well, there are many ways to save and invest your money, right? Nowadays, if you do a Google search, there are plenty of options around. You can either invest directly in shares, open a brokerage account, or futures account, futures account, right? Or you can invest through a robo advisory platform like Stashaway or MyTheo, right? Or if you prefer to outsource that to a fund manager to manage for you, then you can select, you can go through any of the unit trust platforms where you can actually have quite wide access to this, equities, bonds, and so on and so forth. And nowadays, you also have more alternatives such as the crowdfunding and the cryptocurrencies, which I think I know Andrew invests a bit into. But before you invest, my advice is to invest based on your risk profile and adopt an asset allocation strategy. Right? What this means is that you should have an asset allocation portfolio that consists of low risk assets, medium risk assets, and high risk assets. Typically, medium risk assets can be your property investments, or the alternative of real estate is into REITs, real estate investment trusts, and as well as the balanced portfolios of like equity, bonds, and so on. So if you like to find out more about all these, some of the basic tools and the platforms out there, can be on budgeting, or the basic investment to gain basic investment knowledge, I think we can share a link on this. Then at least you can know what are the apps out there, the budgeting apps and all these things that are out there, which you can look at. But again, it's not an endorsement. It's just a sharing of what is out there, right? But if you find that if this information is too much, or too overwhelming, and if you have already tried the DIY, the do it yourself, and it doesn't work for you, either because you're too busy or do not have the discipline to manage your money, on a consistent basis, then you might want to consider getting a professional to help you. In this case, you can consider engaging the services of a financial planner. So how can a financial planner help you? Well, if I were to give you an analogy, just imagine you are a rally driver, right? So you're driving very fast, very busy, working every day, looking, you're only concentrating what's in front of you. And sometimes you lose track of what's going around you, and you don't know where you're actually heading, where is your final destination. So that's where you need a navigator beside you to help you to ensure that, you avoid all those blind spots, the potholes, the cliffs, the wrong turns in your life journey, right? But at the end of the day, you are still in control of the steering wheel. So if one were to go through this process alone, most of the time people, might give up halfway. And because they may not have the knowledge to learn so many things, right? And to be so-called skilled, or, to be good in all areas of personal finance. And I think in the long run, you really need discipline to really do it yourself. So if for those that have the self-doubt, and they know that they tend to procrastinate when it comes to making this decision, and and it can be sometimes emotional, whether to invest, and when to take profit and all this. So I think this is where they can actually engage a financial planner. That's where a financial planner comes in. He or she can provide you the assurance and for you to have the clarity and confidence to make those really hard financial decisions.
Yeah, I agree with you, Matt. But now, I'm thinking from students' perspective. Now, how a student can actually attain the support or guidance from financial planner? So, do you think that it is easy for the students to get some kind of advice from the financial planner? I totally agree with those persons who is having salary or income. But what about the students? How students can get the financial advice?
Sorry, I can't really.
How can students get the financial advice help?
How do students get financial advice? You mean?
Yeah.
You mean self-learning or professional help?
Professional help.
Professional help. Well, first you can look into the. If you're in Malaysia, you can look into the Securities Commission website. There's a list of licensed financial planners.
Okay.
So it's good that you deal with a licensed financial planner who is regulated, and preferably look for someone who is fee-based rather than commission-based, because if you look for someone who is commission-based, then you might end up buying a product or investing in a product that has high cost. And that's what we are talking about here, right? Being financially savvy is not just about of course, all said and done, you see the robo advisors out there, they're all talking about low fees, and because those are more passive into ETFs, right, exchange traded funds. But somehow in Malaysia, if you really look into those investments, those so-called active fund managers, right? Somehow the investments are actually still doing better. I mean, if you compare US, of course, they are more efficient. So there, the ETF will outperform the fund managers. But if you're talking about, Asia, you can still actually invest in fund managers who are doing better than the indices. So if you either do your own homework, or like Jinhao, you study the stock market and then you invest for long term. So it's either you DIY or you look, find a professional that can actually help you, not just on the investment area but more on the overall perspective.
Oh, great. Now, I'd like to request all the viewers, please do share this live video and comment hashtag Curtin Malaysia. And then please do comment, and our panelists will definitely address your queries. And now, Jin Ho, I would like to ask you, nowadays, pandemic is affected all the people, and now some young people are so pessimist. Even the employees, as well as almost all the people are so pessimist and fearful about their future, as the financial look may look gloomier than before. So now, what is your advice for them to face this issue?
Okay, so
Jinho, I think it is muted. Yeah.
can you hear me now?
Yeah. I can hear you.
I think first one is okay. Thank you. The first one is get yourself equipped with as much knowledge and skill set as you can. Okay, and the finance industry is a very big industry and what we learn in the uni is just the very first small step. And actually, one thing I always tell people is that, okay, during this, let's talk about the recession right now, okay, because people in there right now, the economy is like not good, it's recession, things of that nature. Okay, actually, one thing that I always tell people is that during a recession time, many people find it tough, financially tough. Okay, however, come and think of it, the money doesn't disappear during a recession. Okay, the central bank doesn't like take money away from the economy. Okay, and in fact, the government around the world, they are actually pumping money, they are printing money and inject into the economy. Okay, with through social benefits and things like that. Okay, so with more money in the economy, why do people still feel that the financial outlook is gloomier? Okay, so actually, on the other hand, we should understand that there are actually people who are making more money, okay, during this pandemic time. Okay, during this pandemic time or during this recession. So the most obvious example is, of course, we have seen, okay, because I am in the industry. Okay, the stock market is actually very bullish this year, despite the COVID. So 2020 is a good year, okay, if you know how to invest or trade. So as you have already heard before, okay, tough time doesn't last, okay, but tough people do. So if you think that, okay, the worst is over, okay, then we should get ready for the economic boom and things like that. Okay, but I think that bad economy is not always an excuse for whatever things that we are facing. Sometimes we have to take the responsibility as well. So at the most generic level, the bare minimum is to do our budgeting well. And I agree with Max. Max shared a lot about on a personal finance level, because every time when I talk about investing and trading, I always tell people, if you cannot manage your own finance well, I don't think you can really invest or trade well, because it requires a higher level of discipline and emotional control. Okay, so that's the thing. So at the most generic level, okay, the bare minimum is to do our budgeting well and make sure our personal finance is in good health, okay, and have some savings.
and then get yourself equipped with as much knowledge and skill set as you can, because during recession, okay, if you have enough knowledge, okay, during recession is actually a good, okay, time, as in the market has a lot of opportunity. Okay, so I think that to sum up what I have said, okay, invest in ourselves is very important. Yeah.
Yeah. Okay. I totally agree with you, Jinho. You see, economic theory also taught us like that. During the recession, people are a little pessimistic, or people are really worried about their means or their job. It is not that much sure. So people try to save more. So now, your expertise really helped them. So this kind of, especially students are also really worried about their future. After completing their degree, are they going to get the job? So now, Andrew, and now that again the same question: the students or young people are so pessimistic and fearful about the future, because they are worried about the financial outlook may very gloomier than the previous ones. So, what is your advice on this issue? You see,
Yeah. Okay. Well, let me look at this from two perspectives. I think at a personal level, yes, things don't look.
hello, Andrew. Hello, Andrew. Can you hear us? I think there is some connection problem with Andrew. Maybe we will go back to Andrew later on. Matt, what are your advice on this? The same questions?
Okay. I think if you're talking about young people being pessimistic and fearful, again, I think it's not just young people. I think it's everyone, right?
Yeah.
So we tend to look at it this way, right? Markets, it's not only the markets, the share market that goes up and down. Individually, whether you are single or you're married, right? You will also go up, you also face the up and downs in your life, whether you are going through, whether you're getting married or whether you're going to have kids, you're buying your first house and whatnot, right? All these are the financial decisions one will make when they go through the life stages. So rather than being fearful and to worry about something that you can't control, why not be prepared and you get better clarity of what you need to do? So, whether the good times or bad, whether it's talking about investing or whether you're talking about your personal finance in terms of, planning for all these life goals, if you do not have a plan on where you're going and what you need to do to get there, then you have a big problem, right? Then of course you will feel very fearful and you just don't know what is it that you need to do and so on and so forth. So make sure to set your goals, right? And develop a strategy, and not just say that, I want to do this, but then you need to take action on those goals, right? So knowledge is power, right? People say knowledge is power, right? But again, knowledge is power, and it gives you the confidence and increases your optimism, right? But you have to take action. If you don't take action, then basically it's just here, but it will not materialize. So you need to know where you need to go and take action on it, right? No matter what happens, you need to start taking the small steps. And how do you improve, and how you improve your situation? You need to take the small steps and track your progress. And when you see progress, you will start to get motivated, and then you will start taking the bigger steps and so on and so forth, right? You just have to be better than where you were yesterday, right? Otherwise, it's like everyone talking about, I want to lose weight, it's just a wishful thinking I want. But if you don't go and, if I tell you today, if I tell myself, I have been always telling myself I need to lose 10 kg. But if you look at 10 kg, it's a lot, right? But if you look at, less than half 1 kg, a week, then maybe, it's not that difficult. So that is where, we have to take that small steps.
Yeah, and in economics, it is called time inconsistency problem. So we are actually deviating far away from our long-term goal, and then we just focus on short-term goal. So therefore, we can have this kind of problems. Andrew, I would like to ask the same question, because this is one of the
Yeah.
important questions, because young people are getting so pessimistic nowadays. So what is your answer?
Okay. Well, firstly, I'm back. Sorry, I was disconnected.
So-
I think the guys have looked at it from a personal finance perspective. Let me provide a different view. I think looking at it from an employer perspective, I think the key message to our grads, as well as the young guys who are out there looking at jobs, do the best that you can. I think the key thing here is that there are still opportunities out there, and it depends on your fit. And you'll have a better fit with your ideal job or your dream job if you really work hard on what you're currently doing, maintain a good reputation, have the right references, network, and really put in the time and effort, to be really good at what you do. And I think if you have the right attitude, especially now, everyone is looking for new employees and team members, right? So I wouldn't say that the hot jobs market has reduced in any way. In fact, we're actually hiring. So, it really depends on the quality of the candidates. And if you're really good at what you do, then I think there'll always be a job.
Okay, great. Now, connected to this question, I would like to ask you, Andrew, what are the key skill graduate will need for finance related job in the future? Because this is very important, because almost all the students are going to graduate soon. Then they are supposed to know about what are the skills they are supposed to get it related to the finance jobs. Over
Sure.
to you, Andrew.
Okay. I think if you look at the industry, a lot of the number crunching and tasks that can be automated will continue to be automated. AI modeling has really made a huge impact on the finance industry. And if you look at ETS, for example, having invested in good algorithms and big data science teams, really then clears the whole trading floor, right? And if you look at the major investment banks, that's what a lot of guys are doing. But again, it comes back to human-related functions that cannot be taken away. Things like the right attitude, being able to work in a team, being able to understand complex problems, break it down, and be able to solve it, and provide real workable solutions. And also the human touch, because I think there are so many apps out there that will help with, insurance or even your personal finance and all that sort of stuff. But someone needs to be behind the thinking of how you develop the app. How do you make it friendly? How do you make it goal-oriented? And all these are human factors that will not go away, right? And there'll also be certain customer groups that still want that human interaction, that would appreciate a close relationship with a good relationship manager, for example.
Okay.
So I would think, in summary, it's now a given that you must be technically good if you want to be in the finance industry, because you're really no longer your competitors are no longer just other grads. It's also the next algorithm or the next computer. And if they can get it right all the time, 24 hours a day, you need to do a little bit better than that, right? And you need to fight these competitive pressures in your own way, looking at what you are good at, how you can leverage on that, but be at least on par technical wise. So yeah.
I agree with you, Andrew. That is why Curtin University is providing students with the Curtin trading room. The students supposed to utilize it very well. They can actually very helpful during this kind of situation, because as you mentioned, there are a lot of training algorithm and all this concept is going on under the trading room, and definitely I'm sure that students will be utilize it very well. And I agree totally with you. Now, Matt, I would like to ask you. You see, now, I'm little focused on young people. I don't know, maybe because students are little concerned for us. So now young people face a lifetime of their potential money trap compared to previous generations. So what is your advice to them to overcome this situation? So that is a question. Before that, I would like to request all the audience, please do leave your comments, and our panelists will address whether it is general question or very specific questions. Definitely they will address your questions. I would like to request all the live viewers to post your comments. And Max, over to you. I think it is muted, Max. Maybe I will repeat the question again. I'm so sorry for that. Max, now the young people are face a lifetime of potential money trap compared to the previous generations. So because of this different kind of situation like COVID situation as well as recession, and we also expect that recession can happen anytime. That is the impact of this COVID or pandemic situation. What is your advice to them to overcome this situation? How to overcome the money trap?
You're talking about the young people, the millennials, is it?
Yeah.
So yeah, I think whether young or old, again, it's quite a broad subject, right? So, but whether young or old, a lot of people out there now, especially during the start of the MCO, right? They have, I think, they had some time to gain more knowledge on investing, and they may feel that it's quite easy to make money and be successful in stock investing. But again, we need to still understand the relationship between risk and return, right?
Yeah.
So my advice is don't just focus on ROI, return on investment, but to make sure your overall net worth is growing, right? And to make sure your net worth grows, you need to ensure that you're not just looking at ROI per se, but you need to also look at the other areas, like to make sure that you reduce the financial risk and the financial costs, right? One example of financial risk is that if you focus all your money on getting, let's say, high ROI, right? And if something happens to you, either, touch wood, if we are disabled or we face an illness, and you need to make sure that you have the right insurance coverage, right, to protect your wealth. Right? Otherwise, you'll be in a situation where you need to force sell your assets, right? If you are investing in stocks, you want to be able to sell at a higher price, but you do not want to, force sell when the market is low, right? So make sure you have the right wealth protection strategy. In this case, you're looking at the risk, what kind of risk management instrument? It's called insurance, right? So otherwise, you will need to have a lot of reserves, right, to settle those medical bills and to continue paying for your living expenses. So insurance will help take away that risk. Now, if you don't have insurance, then you need to make sure that you have a big trust fund there waiting to self-fund your needs, right? So then the next is to ensure that you have cash reserves, the emergency fund. A rule of thumb is to have 6 months of your reserve of your monthly expenses. Why? Well, one financial trap that people tend to face, is they probably over leverage on their property investments. So make sure you don't take too much risk and overcommit on those installments, as it will affect your cash flow if you don't have the ability to repay those installments when there's an emergency, right? I think recently those who have rented their property, I think before the COVID, right, those who are renting their properties for homestay, Airbnb, you know, they would not imagine that you'll face a situation like this, right, where they couldn't rent out their properties, right? And if you're not able to get rental to cover your monthly installment, imagine, you know, at the same time, imagine if you lose your job or if you get a pay cut, right? So how so many things can happen at the same time. You know, when you're stressed, something happens, you end up in the hospital, you cannot work, you know, you lose your job and so on. So all these are part of risk management. So you need to make sure you have the cash reserves in place so that at least it will help, you know, go through that difficult situations. So I think in overall, one must really have a big picture view before they rush into, you know, investing and, you know, chasing for the ROI. And last but not least, make sure you don't just chase for ROI in terms of return on investment, but you also make sure you are aware of this thing called another ROI, which is return of investment. What do I mean by that? Nowadays, there are a lot of investment scams out there, right? And if you fall into this kind of scams, you're not talking about return, you know, on investment. You're talking about whether you can get back your capital in the first place. So make sure you invest in regulated products. Otherwise, if something goes wrong, you really have no avenue to you know, get back your money. You know, if the investment scheme is not regulated or it ends up being a scam, right?
Yeah. I'm sure that, you know, our viewers will have a lot of questions regarding the investment. I'm sure that they will post their comments on their chat bots or the comments bots. Now, I would like to ask you, Jin Hao, what tips do you have for our students to help them set their financial priorities, so and avoid overspending during this kind of difficult times?
Okay, so again, okay, I'll just cut it short. So again, at the most generic level, the bare minimum is to do our budgeting well. Okay, make sure our personal finance is in good health, and the next thing is understand your needs and wants, and understand your financial goals. I think all these things are very important. If you cannot get all these things sort of like sorted out, whatever you invest, even if you make money, you will use the profit on other things to like you make some money here and then you to pay off other things that you did not you don't manage well in life. So I'll just give you an example. Okay, why budgeting can be very, very important and why I said it is a bare minimum. Okay, so this year many people are taking the moratorium, okay, for the loan payments, okay, for mortgages and hire purchase. So some people treat this moratorium as an extra pocket money instead of you get what I'm trying to say, okay? So so some people treat it as an extra pocket money during this MCO time, okay? And instead of setting aside the money for loan repayment, which we should, okay, they are using the money to donate to Lazada and Shopee and those platforms. So if you don't understand your needs and wants, if you don't plan your finance, if you don't do budgeting, these are the simple mistakes that a lot of people can make. Okay, so this is an example of poor budgeting. Okay, so budgeting. Okay, you want to know how to create a good financial plan and budget. I think Max is the expert here. Okay, so and I'm serious. Okay, and then list down your needs and wants. Okay, ask yourself 3 times before you buy something that you don't need but you want. I think this is very good question. When you have the kind of urge to buy something and spend the money, click the pay now button. Okay, I think it is good to think for 3 times or wait until the next day. Then only you place your order. Okay, sometimes we just get like the urge is too strong. Okay, and just share with you guys. Okay, another thing is try to think from an investor mindset instead of a consumer mindset. Okay, so while a lot of people are spending a lot of money with Shopee and Lazada, okay, and a lot of people did not look at the other side, these companies are making a lot of money this year. So if you know how to invest in the share market, if you know how to think from the investor perspective instead of the consumer mindset, then you will know what's the right thing to do. Okay, I don't want to talk too details, okay, because these things have impact. Yeah, so that's the thing. Budgeting, okay, understand what we need and what we want, okay, and think twice or thrice, okay, before buying something, spending something that we don't actually need.
Okay.
I think that's the most important. Yeah.
Okay, great. Agree with you, Jin Hao. Matt, I would like to ask you, what are the small steps we can take to the financial savvy and stabilize our spending?
I think first of all, I think Jin Hao mentioned, I think we all know, right? Before you start anything, you need to know what you're doing. You need to learn, gain the knowledge, read more about personal finance, what is net worth, how to grow your net worth, understand the difference between good debt, bad debt, right? Because if you keep swiping your credit card, you're actually paying, if you don't pay on time, right, and then you're maxing your credit cards, you're actually creating bad debt, right? And if you don't pay the full payment, that's where the interest compounds, right? So you need to get clarity of where you are now and track where you're spending your money and what is your cash flow position. Are you positive cash flow or negative cash flow, right? Once you know where you are, then you know what you need to do to improve your situation. So one way to do that is to start a habit of saving. Humans are creatures of habit, right? So if you know that you have a bad habit of like what just now Jen Hao say, right? Keep buying, and we know that we tend to overindulge in when we use our credit card, right? So if you know you are that kind of person and you want to start on the right track, then make sure you start an automated saving plan that at least takes away that money out from your side, from your bank account, right? Put it into another account, right? Because if you keep seeing your account, your salary comes in and then you see the money growing, you will have a temptation to use that money. So now again, earlier we have many options to put aside, either move it to another account or start an investment, safe and so-called investment plan, right? So make sure you stick to the budget, right? One rule of thumb is that you need to save 20 to 30% of your salary, right? Understand what is compounding interest. So when you learn about personal finance, you will know that compounding interest can work for you or it can work against you. It will work for you if you start early. And as an example, right? Why people say start early? If I talk to a millennial young person now, hey, you need to start saving for retirement. People say, I just graduated, I'm just 20 years old. You want me to save for my retirement, which is what? Now retirement age 60 years old. So I just give you an example, right? If you save, if you are now 20 years old and then you want, your goal is 1 million when you reach when you are at 60, your retirement goal is 1 million. So how much do you need to save? If let's say the return is 8%, you only need to save 285 ringgit per month, right? For the next 40 years, right?
Yeah.
But if you start later, then you need to save 666 per month if you start at age 30, and so on and so forth. That is where one needs to start early and make sure they don't go the other way around, where you start owing money and then the interest will also compound, but not in your favor. It's actually you will owe much more money than that.
Okay, I agree with you. But one question, and this is my question from my side. So now you see, I have some money to invest. I know that the return is around 10%. Now, how do I take consider about the anticipated inflation? Because I'm just asking this question from layman perspective.
Right. So you have two types of people out there, right? One, I mean, okay, maybe more than two, but I just make it simple, right? You have on one extreme side, you have those that they feel that they are the high risk taker. They can actually invest all in. They think that they are high risk, so that they invest all in high risk, right? But remember, I mentioned just now, you need to know your asset location, whereby you cannot put all your money in high risk assets, because when the emergency comes and all this comes, you do not want to cash out when the market is at a low, right? So now then the other end of the extreme is that you have a lot of savers. Those people who save money but they don't know where to invest, right? They think that they are safe, that they, FD is safe, is capital is guaranteed, they know that but they are very fearful of they hear things like, wow, market is going to crash, so they better try to, they have the fear and emotion kind of thing going on in their mind. So those kind of so-called people, they need to know that if in the next so we've talked about rule of 72, right? Rule of 72, if you take out your calculator, you take 72 divide by, if now the FD rate is below 2%. If you think that your money is safe, right? If you take 2%, right, 72 divided by 2, it takes you 36 years to double your money.
Oh.
So if you have 100,000 in the bank, it will take you 36 years to become 200,000. Now, if you invest in something which is in 10%, you take 72 divided by 10, it takes you seven over years to double your money. Now, this also, just now I mentioned about the other way around. So you are talking about inflation, right? So just imagine this. If your personal inflation is 10%, right? Now I'm talking about lifestyle consumption, lifestyle inflation. If your personal, if you don't you don't make your own coffee at home, you actually go out there and buy the $10, $15 Starbucks, right? Now, if your inflation is 10%, in 10 years, in 7 years time, if it's 10%, your 100,000 will shrink in value to 50,000. Which means in 7 years, if you take this money out and say, hey, I want to buy my latte or my cappuccino, right? You're not able to buy that with that kind of money because the inflation has already eaten up your purchasing value. So this is something that with by reading and understanding how interest, how investment can grow your money, then it's all about making sure that you understand your risk profile, go into asset allocation, right? Diversify investments and then monitor your investments. Don't just invest and then wait 10, 20 years and then wow, wait for your pot of gold waiting for you. Sometimes most of the time it doesn't happen, right? Because you may go into wrong investments and you need to make sure that you need to adjust those positions.
Okay, sure. Thank you much. Before the next question is going to be the concluding question for this today's live session. Before going to the concluding session, I would like to remind the viewers, please do ask the questions and our panelists will definitely answer the questions. And I'm sure that there are a number of very interesting questions can come to your mind. Please do ask it. The next concluding question goes to all the people, all the panelists, and this is one of the important questions. As I believe that now you see, financial savvy person keeps emotional far away from your money. So then only you can say that the people are financially savvy. So emotion is one of the important aspects when you think about financial savvy. Now, you see, this is my personal perspective. Financially savvy and emotional is not going to go same way, or they are just go opposite way. So now, how is it possible to keep emotion away from money? Andrew?
Okay, interesting question. Maybe let me start by going back to basics, right? So, whatever funds that you have in for that month, your salary or your allowances, I think if you learn to put away first, then spend, as opposed to the other way around of saving what's left, then I think you're off to a good start, because you take away that emotion question. I think one comment I'd like to make is that while Bursa and all that seems to be doing quite well, and a lot of speculation on penny stocks and such, there needs to be a distinction between investing and gambling. And I think that's something that people get caught up, especially with the emotions and just looking at, wow, this is going up, and all that sort of stuff, and buying into the trend or rumors and such. I think that's not healthy. It might make you money now, but it's a very bad habit to pick up. But then again, I mean, everyone is prone to weakness for that, and I personally have a small fund that I take as entertainment money. So, if I make big, then okay, that's nice. We'll go for a nice dinner, and if I lose, then I get the excitement. So I think that's my way of dealing with the emotional component of financial management.
Okay, Jin Ho, how do you deal this financial savvy person keep emotion far from your money? Now, how it is possible to keep emotion away from money?
Okay, so I'll speak from my profession, and I think that Max will later share about this from the perspective of personal finance level. So I will share from my perspective and also from my profession, which is the stock market, investing, and also trading. And I do agree with what Andrew said just now, penny stock speculation and all those things about the rumors, all those things. And I always tell people this: when emotion is high, intelligence is low. When emotion is high, intelligence is low. Okay, so that's why it is a progress that everybody has to deal with. Okay, so let's talk about emotion. Okay, I would say education and experience are the two things that we need. Okay, you cannot profit consistently from the financial market without learning the proper ways. Yes, you might make some money here and there from the glove stocks or from the penny stocks, the speculation and all those things, but it wouldn't be consistent. Okay, you might end up, okay, the emotion is so high and you end up gambling after the fact. Okay, so and I really think that, okay, learning is very important, and that's why education. So when you are learning from the professionals, you are actually learning not only the knowledge, okay, but a system. Okay, so when you have a systematic approach, okay, towards investing or managing your money, okay, you get less emotional. Okay, of course, this must be paired with your discipline as well. Okay, so again, how do you keep the discipline at a high? Is to have, for me, is to have personally to have a financial goal. I know my goal. That's why I want to stay as disciplined as possible so that I don't get deviated from my goals. Okay, so when you have a systematic approach, okay, you get less emotional, of course, paired with discipline. And the earlier you start this process of managing your money or investing, trading, and whatnot, okay, the more experience, okay, you will get throughout this journey. And very often emotion comes from lack of experience and don't know what you're doing. Okay, so and I highly encourage everyone to start early, okay, and start now if you haven't already, like what Max has just mentioned just now. Okay, the earlier you start, the more advantage you have. Don't wait until you have enough money, then you learn how to manage your money. Okay, be it invest, trade, or personal finance. Okay, yeah, start early, because if you can't handle small money, you won't be able to handle big money. So yeah, that will be what I want to share with everyone.
Great. Matt, what are you?
I agree with what Andrew and Jin Hao is saying. At the end of the day, you need to know, you need to have the knowledge, you need to have the time, you need to have the discipline. And only recently a lot of people have a lot of time. They thought they have a lot of time because they're working from home, so they have a lot of time to study the stock market, and then but don't forget, investing is actually a long journey. It's not just a one-off event. You need to be consistently so-called getting that returns, right? So when it comes to investing, you need to invest based on your individual risk profile, right? This will reduce the emotional roller coaster Especially if you're the type who keeps worrying about your investment. Every time the market go up, wow, you are happy. Every time market down, your mood also die. You know, your mood, you go to work also, you know, you so affected. So and worse is if you cannot sleep at night, worrying about what's your money going to happen when the bell, you know, the opening bell rings tomorrow. So one way to avoid making these emotional decisions of when to invest, what to invest in, or when to sell, when to take profit. Should I sell part of my portion of my profit, or should I just cash out and then wait at the side? You know, what we recommend is to have an investment plan, right? Understand your goals and break up your goals into the short-term, medium-term, long-term goals, and then invest based on those, the risk that you can take for the long-term goals and the risk that you can take for the shorter-term goals, right? So whether the market is good or bad, you need to look back at the plan and then see where are the changes that are needed to adjust, you know, or to take profit, or, you know, like what Jin Hao said, you need to have a systematic approach when you talk about investing. You cannot just like people say suka, you know, when you just feel like it, you just take out the money. Then you feel like it, you just go in just because your friend telling you this is a good time to go in, right? You need to have a proper strategy on how to manage your portfolio. Otherwise, you know, if it doesn't change, if the situation doesn't change, then you should stick to the plan, right? If you cannot handle the volatility, which means if you cannot handle the market volatility, then and if you keep having to worry about it, that means you are going into something that is higher than the risk that you can tolerate, right? So make sure you review your risk profile, right? Your risk appetite, and adjust when you are reaching your financial goals, right? Sometimes it also needs to look at your investment period. Doesn't mean that doesn't mean that you are a moderate risk investor, you cannot invest in stocks, right? If you have another 20 years before you retire, or 30 years before you retire, you should invest. You should take higher risk, right? So growing wealth is more about the process. It's not about focusing on the return on investment. Not I want to make 50% return this year. A lot of people make the mistake of waiting for it to go up. But if it goes down, then everything just stops. They don't continue their savings. So my advice is make sure you build your capital, right? When you have the capital, then you are able to break your investments into, like what Andrew was saying, you are able to put into safe assets, and then you can go into a bit more higher risk assets. But you need capital to do that, right? Otherwise, if you're just only going for the ROI and just waiting for it to make money, then only you decide whether to put in more money. Well, that's where people always make that mistake. So investing is about consistency more than anything else.
Okay, great. I think now we have number of wonderful questions in our live sessions. Now, I would like to ask some questions from Chan Tung Shun. And when he is asking the question, when you start investing share and given financial limitation, would you focus mainly on growth share and dividend shares? This is really wonderful questions. You see, this is I will repeat the question again to understand further. When you start investing in share and ETF, given financial limitation, would you focus mainly on growth share or dividend share? Jin Ho, do you have anything to advise Chan Tung Seo?
Okay, so I think this is a good question, and I actually get this question quite often. So when you start investing, okay, so I assume that you only want to invest, okay, not trading, because I do invest and trade both, but I will just keep these comments from the investment perspective, and I'll answer you both in between these two options, which is growth shares and dividend shares. So if you say given financial limitation, the straightforward answer I can give you is growth shares. It's very simple, okay? It's very simple. I was once in your shoe, okay? Now, back then, I have really don't have a lot of capital. Now, now from, let's say, if you buy a share, okay, if you buy a share, let's say the dividend yield is 8% or even 10%. I think 10% is like very, very the top dividend yield that you can find in some of the great companies. I think 10 is like too good. But let's, for simple math, okay, for simple math, 10%. Now let's say if 5,000 ringgit is all you have, okay, after investing for 1 year, you get 10% dividend yield, which means it is like only 500 ringgit. Now, well, 10% dividend yield is good, don't get me wrong, but here's the thing. When your capital is too little, the dividend yield might be good, but the amount you get is nothing interesting. It is not a life-changing amount. So I always prefer that for young people, because you still have the time and energy to learn, and you can still grow your active income and put more money aside, and you still have time to learn. That's the most important thing. You still have time to learn. So I would say that investing into growth shares or even trading. Now, when I say trading, I don't mean like speculation. Okay. So my strength is trading without monitoring and speculating. Okay. So it is not like Hong Kong drama. You watch all those things. Okay. It can be mid to long-term trading, not necessarily have to be short-term. Okay, so the first stage that you need is actually first is grow your portfolio. And how you grow a portfolio? Two ways. The first is, of course, you put money consistently into the portfolio while you are learning, and I stress learning, learning how to trade or invest. Okay. Second thing is you need capital gain. Okay, because again, 5% dividend yield or 10% dividend yield might sound good, but when your portfolio is really small, it is not really a life-changing amount. Okay, so if you were to ask me, focus mainly on growth shares or dividend shares, when you have like limited capital, I will just straight away point you to growth shares.
Okay, great. Andrew, connected to this question, what is the impact of this financial decision on the future?
Okay. Well, firstly, Shin, when you do make money out of this, remember me and buy me a beer, yeah? Dong Shin is my cousin.
Yeah.
All right. So now, I think generally in terms of impact of all financial decisions, right? Not just on investing, but also on your spending and, just generally how you manage your money. The key impact is this. When you really need to take a loan, right? Banks will look at how you have lived your financial life, and this will impact your credit score. And the next time you're thinking about making a frivolous purchase, or upgrading to that new fancy car, or getting that new handbag or anything, and your chances of having to take that EPP or to take a small loan to afford that nice fancy thing. Just remember that all these will catch up to you, because your future credit score is the key thing that you need to protect. That's a key asset that not many people think of when they're in that heat of the moment. And I think there's a need to be really aware of the things that impact your credit score, right? Which is how prompt you are on paying your loans and all that sort of stuff. So, if you're thinking about investing or taking a loan to invest, then make sure you're able to profit from it, and always keep up with your repayments, even your credit card.
Okay. Now, next question is asking. I think this is the same question. All right. Do we have another question? Yeah. Iziad Mahmoudi is asking, is now a good time to invest in properties? This is one of the question in my mind too. Max, what is your comment on this?
I think you pretty much can guess what I'm going to say, right? Firstly, right? Firstly, before you talk about investing, you really need to know your current financial situation. I cannot stress on that more. Why? Because if you are thinking that, there's no one has a crystal ball. Correct, guys? No one has a crystal ball, right? You can say that, now it's dividend stocks play, now it's growth stocks play, now it's Asia, now it's China, now it's healthcare, now it's tech, now it's REITs, or and so on, and so on and so forth. Now it's gold. So what I'm trying to say is you cannot time the market. If you look at the winners and the losers every year, you can see that there is no correlation. There's no winner every year that wins the market, right? It's always an up and down. And that's where you need to be you need to go back to the asset allocation. It's not about timing the market. It's not about whether now is the right time. It's about you being in the market, and whether or not you have to look at the liquidity, whether if you're talking about property, can so many factors, right? If it's emergency, can you sell your brick and mortar house, your physical house, and get the cash in time? Or is it better to look at alternative into REITs, right? And so the question is, should you focus on time in the market rather than timing the market, right? So make sure that you have a portfolio that has all this asset allocation, and make sure you're diversified enough so that if the market were to go down, your net worth doesn't just crash and burn overnight. Right? So that is where my advice is, don't try to time the market, because sometimes you get it right, sometimes you don't. So it's better to focus on the consistency of your returns, right? No point making like, for example, I give an example to most people, right? If you invest 100,000, and then let's say the market goes down 50%, your value goes down to 50,000. It takes double the effort to recover back to square one where you were, right? So imagine if you put all your money in there and then say that, this is the best asset or best so-called game strategy, then you will be very disappointed, But then again, you don't forget, you still have a long way ahead of you. You do not want to make these financial mistakes, and then later on, you take many, many years to recover just to get back to square one, right? So yeah, that is my take.
Okay, thank you. These are some comments in Facebook. There are some comments about in our degree program as well as foundation program. Our marketing department will touch with the person who is asked some questions regarding the courses, and I would like to request all the alumni. We have a PhD program, Master of MPhil program. I would like to call all of you, Dr. Max, Dr. Jinho, and Dr. Andrew.
Dr. Andrew Tan.
Yeah. So in future, think about doing research. We have wonderful facility as well as we have wonderful supervisors, and please think about, or otherwise you can also advise some other students who is really looking to do some kind of research. Definitely that will be helpful for them. And I would like to summary today's discussion. Now I think that financial people are going to have three important steps. First of all, they are supposed to live within your means. How much money is coming in, and how much expense you are having monthly, and then you must have a short-term plan. That is one of the most important things financial savvy people should have. The second one is, as all of you mentioned, that we are always looking for the deals. Always think about looking for ahead for the saving opportunity, and then set the saving goals. So this is another important aspect of financial savvy people. And the third, the most important thing, even though you feel you do not have money, make sure that you save some part of your money. So never stop saving and investment. That is the third part I would like to get from our today's discussion, and put away enough to save for our future. And there are many opportunities are there to save. So I would like to summarize this today's session by saying that, let knowledge and noble thoughts keep coming from all sides. And then once again, I would like to thank Curtin University for organizing this session to educate our students, our community. And I would like to thank all the panelists for their wonderful contribution. And now let me hand over this session to our host, Dean, to announce about today's lucky winner and wrap up this live stream session. And thank you for participating today's webinar. And we hope to see you again next time. And over to you, Dean. Thank you.
I think we have we've got quite a number of information and quite a very insightful comments from all our panelists and also Dr. Abe as well. Okay, so I think it's pretty much about it's all about planning. Okay, you need to plan. In finance, it's all about planning. Okay, so you need to be dynamic, you need to be flexible and adapt to the changes. All right. So, but before we head off to before I announce the winners, okay, actually there is one question just came in. Okay. Would fintech enable the sole business owners to somewhat compete with franchise or larger businesses? If so, how? I think Andrew, can you give a little bit of comment on that?
Sure. Okay. I think firstly we need to put into context, because this is quite a wide question. And if I read this correctly, we are talking about business owners competing with the bigger guys. Let's take coffee shops, for example, right? So let's say a typical coffee place in Perth versus, say, Starbucks. There's now AI-driven POS integrated systems with inventory and all that, which will allow an AI to help the coffee shop owner run the business. And they do that by looking at, firstly, what's your inventory like, right? So how many coffees can you sell? What's your sales like? What's the likely footfall per day? And they'll be able to predict certain trends to say that, all right, certain days, if it's raining, you're likely to have less customers. If it's a sunny day, maybe more customers, and it'll then adjust, right, based on your actual revenue. It'll also tell you, right, you're likely to have a shortfall in cash flow in 3 weeks' time. Do you want to take out a small loan to make up for this? Or that your coffee machine is 6 years old. Maybe it's time for a repair or to an upgrade. Those sort of fintech integrations will bring a totally different game, right? Because instead of managing your business based on gut feel, or you're checking the store and looking at your finances, it will do everything for you. So yes, I think fintech will really change the game. The question is pricing, and can these smaller guys afford it?
Okay, I think it's more or less like it's a very challenging world nowadays. Okay, so we just need to keep on adapting and then move in tandem with the technologies. Okay, if we do not embrace the beauty of the technologies that is around us, I think we'll be left out quite far. And this is something that is pretty much quite basic in any business. Okay, either you catch up with the trend or you'll be left out. So this is how I look at it. Okay, I totally agree with Andrew that by having the technologies, it actually does help into even the small businesses, of course, to the bigger business as well. Okay, so yes, I've seen. Thank you, Samuel. Okay, Samuel said that. Okay, it is a very good discourse and very insightful session today. All right, let me announce for the winners of our lucky draws. Okay, we have 3 winners. Congratulations. Okay, so the first winner is Veronica Lim. Congrats. Second will be Fiona Chin, and third will be Jess Chin. Okay, so don't worry, our Curtin University team will contact the winners and then get all your details, and we'll ship over your gifts. What was that again? The pen drive, exclusive pen drives. Okay, so I think thank you very much. Thank you, Dr. Abby. Thank you, Jin Hao. Thank you, Max N. Thank you, Dr. Andrew Tan. Thank you so much. Thank you for all your time. Okay, thank you to all our viewers. Please stay tuned. Okay, next time we'll be having a much more exciting episodes. Okay, so I'll see you guys around. Bye bye. Till next time.
Bye.
Cheers. Thank you.
Bye.